So the crypto world is without a doubt exciting. That's why many of us are in this, right? However, there are some types of peoples who are in specific situations who should not be participating in the crypto space because they might get wrecked. And so in this video, we're going to cover 7 different types of people and situations in which they should not be participating in crypto investing or trading for their own sake. So if you want to know what these 7 types are and if you fit into any of them, then just sit back, relax, and keep on watching. Hi everyone, I'm Kevin from Bitcoin for Beginners, and this video is part of our content partnership series with HodlBot. It was originally written by Anthony Xie, the founder of HodlBot. Original article down below. I'll leave it in the description as well. Also, if you can support us, if you like this series, like this video, then just smash that like button, subscribe down below, hit that notification bell, and be sure to check them out at hodlbot.io as well. So recently the market has been better than it was for most of 2018, right? And this means that there's more investor interest and more activity in the markets as well. And more people coming in, more new people specifically. And with the rising price, this means that our worst tendencies are likely to come back, which means FOMO, getting wrecked, and so forth. So let's rehash some bad reasons or situations for participating in crypto in the first place. First is if you have really high interest debt, you should not be participating in crypto space. An anonymous trader wrote, and Anthony gathered all of these quotes for each of these situations. Once my crypto portfolio moons, the first thing I'll do is pay off my student loans and credit card debt. So of course, the smart thing to do, financially responsible thing to do, is to first pay off your credit card debts, loans, and so forth first before investing at all. Because crypto is a very volatile asset, we all know it could definitely go to the moon, but it could just as likely go to zero. So don't rely on it to bring you financial liberation. Better to miss out on this opportunity than to be in financial ruin. Like the Redditor, who, for those of you who read crypto Reddit like I do, might remember this guy that told us a story how he traded with leverage and lost all his money and can't pay off his student loan debts, can't pay anything, and was contemplating suicide. That is a really bad situation. We don't want to wish that upon our worst enemies. Number 2 is if you're in crypto because you think trading it is easier than other types of assets. Quote from another anonymous trader, "I want to learn to day trade Bitcoin because it's easier than Forex." Yes, crypto is a new asset class, but there are already professional traders and algorithmic traders in this market, and those pro traders are way more likely to take your money than for you to beat them. During the bull run, everyone did well, right? It wasn't hard, didn't take a genius to pick coins that were winners. But did you beat the market index though? It's easy to get lucky in the short term, but really hard to beat the market in the long run. This is not only true in the crypto space, but in general markets too. 50% of active money managers beat the S&P 500 in 1-year period, but only 5% out of all of them out there were able to beat it over a 15-year period. We can think of this in terms of the crypto world as well. Here is from the SPIVA US scorecard, and you can see this report is percentage of US equity funds outperformed by benchmarks. Benchmarks like the S&P 500 index per se. And you can see on the very right hand side, 15%, almost all of them were beat by simply following the S&P 500 index. Number 3 reason not to be in crypto is if you're just trying to chase a shiny new car per se. And so another quote, proof of work blockchain networks is so 2017, I'm all about proof of stake, DAGs, ternary number systems, zero fee scalable blockchains, all these buzzwords, right? Because new tech, while cool, is not the only factor for success of project. The social and economic properties of crypto networks are even more important if you think about it. Bitcoin took existing technology, added together with the right incentives to allow the network to grow organically, and so the value has risen steadily since. New tech gives you faster, cheaper transactions, all that good stuff, but that does not mean it will succeed. Most are untested and do not have scale, which is really hard to accomplish. Number 4 reason not to be in crypto is if you have FOMO or just treat this as a quick money scheme. Quote from an anonymous trader, "I know it's a bubble, but I just want to get in and out before the bubble pops." It's very hard to time the market. It may go up like 2017, but it can also crash like 2018. Even most professional traders get it wrong. That's just part of statistics and history. If you treat crypto as a make money quick, you're pretty much gambling. It'll just be easier for you to go put money down on red or black at roulette instead. People who FOMO'd back in 2017 near the high still haven't recovered their money yet. Just think about that. And greed and FOMO are especially dangerous because you risk more than you're prepared to lose. I say this from experience too. I've been really trying hard to tamper down my FOMO when stuff starts rocketing as well. Number 5 is people who don't understand that in the crypto world it's mostly about speculation should avoid this space. When you own a coin, you really don't have anything tangible being produced. Warren Buffett, even though we don't like his views on Bitcoin, he is right about that. It's not really a productive asset in a sense. So you must understand that these coins are speculatory assets, and the price depends on supply and demand. Price goes up when more people want to buy than sell. And the future price also depends on what people will buy from you at that time. And so it's not based on fundamentals. There are some fundamental valuation methods being created, and a lot of them being shared on crypto Twitter per se, but no real meaningful consensus yet. And so any fundamentals that there might be are surely not priced into the market yet. Number 6 type of person that should not be in crypto is people who have all their cash in crypto. Anonymous Trader says, every time I pay rent, I just pull it out of my crypto portfolio. What a terrible idea. You definitely need an emergency cash fund, and your crypto portfolio is not an equivalent. First of all, crypto coins are not so liquid, especially when you need them to be. Withdrawing and exchanging for fiat can take a long time, and unfortunately you can't buy that many goods and services with crypto without first converting to fiat, as of right now. Of course, we are trying to slowly improve merchant adoption, but it's not quite there yet. Also, it's really bad idea for your entire liquid assets balance to change 20% in one day. You might not be able to afford rent if that's the case for a month. Last but not least, people are in the space just to try to recover the losses. Someone who said, X coin dropped 75%, I'm just waiting for it to bounce back and make back what I lost. After that, I'm done with this. Because people are loss adverse by nature, and they commonly fall into the sunk cost trap. And what that means is that they keep or double down on their losing coins because of the time and money they already put into it. And so people will hold even if cutting losses is a better move long term. And in terms of crypto, emerging tech investments tend to follow a power law distribution like I show you on the right hand side. And so the top 20 coins make up about 89% of the entire market cap. Assuming the returns you get are similar, you'll see a few coins that'll give you huge returns while the others die off. So you have to ask the question, is the coin you're holding on to, has its heyday been in the past and will never recover? Or what, right? Ask yourself that hard question. And so what does that mean if you don't fall into any of those categories or situations? Invest responsibly. If none of these apply to you, then investing in crypto may be an option for you. Some good reasons to invest in crypto include portfolio diversification, stocks, crypto, gold, whatever, hedge against inflationary fiat currencies, owning censorship-resistant assets, privacy, and if you do end up investing in cryptocurrency, consider index funds like the ones offered on HodlBot, which track the performance of the entire market. This is good because in stock markets and equity markets, index funds outperform 80% of all professional money managers. So it's really passive and a chill way to get returns while not having to worry about it. So thank you everybody for watching. What do you think about this article written by Anthony and shared to you as part of our content partnership with HodlBot? Let me know your thoughts down below. Let me know if you fall into any of these categories. Smash that like button, and I'll catch you guys next time.